Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook on the futures markets. This is where we're going to take a look at our big six markets and formulate an attack method for tomorrow so we can be as prepared as possible. Now, before we start jumping into all the charts during this FOMC day of ours, make sure to swing on over to the website, slingshotfutures.com, scroll down, and click on the daily outlook newsletter. This is where we're going to post and let you know via email as soon as our newsletter comes out. You will know exactly when, so you never miss a beat. And we also post different statistics and different stock calls and different fun little things inside there that you can keep an eye on. Along with that, while you're there, make sure to check out the blog post at the bottom. This is where we post our morning prep levels for trading that day. We post these every single morning for the big six as well. So all kinds of good information for you there. All you got to do is click on the links and sign on up. Now, looking at the Bund market first, the Bund had a really strong start, right? We opened up the day down here and it never came back. That first candle of the day was the low of the day. It just didn't stop going higher. Now, this momentum to the upside, obviously very strong. We took a little bit of a pause there and then it made another rally back up. After it made that rally higher, it started pulling back just like normal, and buyers are probably buying into this move. But then this happened, right? We had a little bit of news come out of France. Without getting into all the details and all of that, some French guy is not running now. So in terms of the way that all of that played out, had a pretty big impact on our markets, right? We had a big dive lower on all of our markets. Well, guess what? The European markets are probably going to see a pretty similar effect, if not a little bit more expanded on. So some big surprise news came out, shoved the market down through the lows, and that kind of shifted gears, right? We were bullish, and then in one candle, in one announcement, you're bearish, right? So that kind of momentum that we have, now we're starting to see, well, there's a lot of buyers that are probably stuck. They were likely buying this entire way up. They probably made their month worth of profits on the way higher. And as it's pulling back, everyone is going to start buying into it again. And then this happens, right? So now they're all stuck. Well, whenever you have a stuck trader, generally speaking, the markets are going to start kind of getting a little funky. Either they're going to run really fast because everybody's exiting, hitting the doors, right? Like, oh, get me out of the trade. Or they're going to try to buy in, scale in, and then look to exit if it can come back. And notice where we are right now, right? We're right back into that cluster where the buying started taking place. We're right there again. So chances are the buyers that were in earlier may be getting out for small losses instead and have avoided that big drop lower. We are rising off of this area of support, possible wedge bottom. Saw a little ping off of there, quick little kind of double bottom trap, and a move back up. So the aggression definitely lies with the bulls still. We're above the moving average. Very tight little wedge forming here as well. One thing that I would really like to see, in all honesty, is a quick dip down and then continuation back up to the upside. That may be the final leg up, but I'm looking for them to get back up towards the highs, maybe a head fake above it, and then from there looking to sell it right back down again. So looking to buy, but on a little bit of a pullback. Over on gold, now we're starting to get into the U.S. markets, and the FOMC news announcement will definitely play a big part. Again, don't forget, we had that big surprise announcement that came out that caused the markets to go a little bit bonkers a little after 10 o'clock. But aside from that, overall, we had kind of a range-bound day from the start. If we look at the morning session, we had a new high, a new low, a new high, a new low, a new high, and then a new low, and guess where we're probably going to go, right? We're probably going to make it up to a new high. Now, the way that this is forming at the moment is very lackluster to the upside. It definitely could look a lot better, and it almost sort of looks like a flag in a way, almost more of a range, really. Very kind of nasty looking up here. Now, a lot of that is coming off the backs of FOMC, so it's not really a big surprise to see this get kind of choppy. But right now, that's just creating a huge range. We have a sell high, buy low mentality, stay out of the middle, which is exactly where we are. And we're looking to sell at the highs. That's 41.9 to 40.7, maybe a little bit above it. And then the lows, looking to buy from 32.7 to 31.5. And again, a little bit below that as well, is always welcome for better pricing. Right now, we're just kind of smack in the middle. And this is the same place that we saw a bunch of chop and slop from earlier. We're right back inside that range. So until we get away from this, I really can't have any interest just because it's expected to be kind of gross, and I really would rather not get chopped up. Over on the bonds, kind of the same scenario as gold, but a little bit heavier on the bear side that dropped lower. The bonds didn't really have, a whole lot going on. It's a slower market in general, but a nice bull trend running higher. We had the surprise news come out as the buyers were probably buying, slammed lower, which would come as a surprise to a lot of buyers that may have been trying to scale into that. And you can see they tried getting it to go back up. Hopefully, just please come back, get me out. And it couldn't even make one bull candle before turning right back around. So heavy market to the downside, working its way lower. Then the FOMC came out, saw a snap reversal right back up into major resistance. That's where we saw the pause earlier, as well as where the buyers tried getting the pop back up after that drop lower. And that puts us at around 151.18 down to 151.14 and looking for selling pressure inside here to potentially drop the market right back down again. Now, the location that we are is, we could just end up being nothing more than a range that's all of, 8 ticks. So we may just kind of cycle back and forth here. At the moment, the buyers are holding control. They're above the moving average. They're showing that they want to try to continue, but we haven't really been able to close above that 151.14 area, and that's a pretty big red flag. So even though the buyers do own the market, I would still rather be looking to sell right now, in all honesty. But before we start just jumping into a sell side and using a massive stop to try to stay in it, I would rather wait for the sellers to dip down, then pull back and drive the market back down from there. That will give you a little bit of extra confirmation. It'll show that the sellers actually want to show up to the party. Right now, they're just kind of hesitating. So I would rather wait for a little more information before diving into that one. Over on crude oil, keep in mind tomorrow is inventory day. We'll have the API report coming out in about 10 minutes here, and we'll get that all loaded up. But at the moment, we're looking for a pretty solid down move, all things considered. Now, the bearishness that we saw, crude oil remained relatively unimpacted by the surprise news at a little after 10 o'clock, and the FOMC doesn't really have a huge movement either. It's crude oil. It's kind of separate from everything else. Sort of a shelter market, which is probably why it had so much volatility today, because, nobody wants to trade the other markets for very long because FOMC is later. So being the case, we had a pretty good day on crude oil. Some nice movement. Good bear trend working its way lower, got stuck in a small little range, trapped the high, dumped back through the lows. Big move down, and once again, rinse and repeat. Big range. What I would like to see is a quick trap on the highs, maybe above 53.69, maybe a little further up. Come back and retest the bottom edge before that breakout move. It'd be around 87 or so, and then look for a sell right back down into support between 47 and 35. So looking to sell, but I would love to see a trap on the highs first to really kick things off. On the Nasdaq, range bound. That's about all you can say for this one. We had a new high, new low, new high, continuation, and then it collapsed on itself back into a new high. So we are high at the moment, and we're looking to sell, just like always. Sell high and buy low. But there's one little caveat to this one. We have a big area of support, 53.46, kind of running through the middle of this. We saw the market get stuck there quite frequently in the early session. They paused around that area for a little pennant when they came back. Even the surprise news got stuck around that area. The FOMC, same thing, got stuck around that area. So this is obviously a big level that we need to keep our eyes on. So that 53.46 area kind of creates its own little range. You've got the upper bracket of the range and you have the lower bracket of the range, and both of them can be treated the same way. Buy low, sell high. At the moment, we're cycling off of the highs after a lower high potential reversal off of the bottom, and that's after the buyers really failed to close above that prior high. You had that big rally to the upside just ahead of the FOMC report. And, it didn't do so well, right? Notice all of the wicking up here, not a single candle able to close above that 53.75 area. Even when they came back to retest it, a big failure down. So likely a lot of selling pressure inside here to attempt to drive the market lower. Major support, again, 53.46. Don't lose sight of that. But if we can break underneath it, we could be in store for a bigger drop down to 37 3/4, down to 36 1/4. So plenty of downside momentum left on the table for a drive down if the market wants to give it to us. And then finally on the S&P, excuse me, a lot more range bound here on the S&P. Now, the way that it's kind of operating here on the S&P is really slow and choppy, and that's pretty indicative of an FOMC day. But in reality, looking at this, aside from the price scale being pretty wide, it was a pretty volatile day. it really isn't doing a whole lot. Even with the FOMC announcement, it really didn't get very far, right? We're still stuck in that same range that we've been in for, well, since around 10 o'clock. The surprise news announcement that hit, that kind of kicked everything off, and the FOMC really didn't break out of that. So kind of a curious little situation that the S&P has found itself in. We did have a new low into a new high into a new low. They failed to make a new high, which is a very bearish indication. Now a possible wedge running across the top, but we also have a possible wedge running across the bottom on up as well. So definitely a couple little lines in the sand that we're going to have to worry about here. But the one thing that really kind of sticks out, aside from the failure to break a new high, is this range that we've been forming, and even the FOMC really couldn't shake it. Now, a lot of this could just be due to the fact that the prior day was a beautifully bullish day, lots of range, and whenever you have a day like that, the following day is usually not much, right? But I was thinking with the FOMC, it might not really matter, but apparently the FOMC didn't do a whole lot. So pretty big range overall, but not really much accomplished today on the S&P. So range bound, looking to buy low, sell high, using this wedge more as a trap area, wait for the fake break of the high, sell in, or wait for the fake break low and then buy back into the opposite edge. So that's going to do it for the daily outlook. Fingers crossed we get some more consistently good price action tomorrow, right? Today had really good price action, but it was erratic. A big burst of movement and then nothing for 2 hours. And then a big burst of movement and then nothing for 2 hours. Looking forward to hopefully a little bit better movement tomorrow. So don't forget, we have the API report coming out just around the corner here, and inventories set for tomorrow. And that's really the only U.S. announcement. The forecast for the inventories tomorrow is 3.475 million. The previous was 9.527 million. So quite a difference there, but the API tends to be a little bit more accurate. So pay attention to that. Until tomorrow, have a good one. Make a plan, trade the plan, follow those rules, and we will see you all tomorrow.